The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, Koala Bear of Wall Street, and it's going to be an interesting day out here today. We've got a market that's a little bit of country, a little bit of rock and roll out here again today. Mostly rock and roll, up 32 points on the S&P cash, 2.8 billion shares. I tell you what, you could have knocked me over with a feather over the last few days for the kind of volume we had going in to the end of this year. It is rather unusual, let me put it that way. And it is going to be, I don't know what you can say. It's going to be one for the history books, let me put it that way. So as we go through the rest of the day, we'll figure some things out. And I know we've got a couple of technical difficulties, and we'll smooth those over as the show progresses. So we've got some decent volume. Expiration is tomorrow. We've been up to a high of 2049 on the S&P cash. We're printing off at 2044 now, actually 2045. If you've been listening to the show for the last few days, you would have seen that we have been pretty much thinking that there is a what can we do here? Let me get one thing fixed here. Oh. Hang on just a second. Getting a few things up and running. But anyway, we have a few things that are probably getting to the point where there's going to be very diminishing returns. But anyway, if you've been listening to me for the last week, you've heard that we've had basically options pointing to this higher level. And in my newsletter, over the last couple of days, in fact, Tuesday morning, I thought we'd have 40 or 50 points higher. And that was what the options were telling us. The option market makers are probably the best at trading. They at least have a pretty good idea of what other traders are doing, and that's why they are probably the best traders. And they're the best hedgers. And when we saw the market down in that, 1980, around that level, 1975, they weren't bucking. They were pretty much holding to their guns. And that told me, for the most part, exactly what we were looking for. And that was a bounce in this market. Now, if you listened to the show yesterday, we went through, as many stocks as I could, as fast as I could, showing you how many of them had basically broached lower levels, previous swing levels, on lighter volume, and were due for a bounce. And, of course, we got a lot of that bounce yesterday, the other part of that bounce today. And it's probably all the way in there. I'm going to watch the numbers tonight. My thought was that probably about 2050 to 2070 is all you can expect. Now, maybe we get just a little bit more. We have so many people that are bearish, and they're going to have to slowly cover over the next couple of days. And my guess is we're probably going to have a few ticks up. Maybe tomorrow, maybe 5-7 points higher on the S&P cash. But it's going to be rather muted compared to what we've had over the last 2 days. So just stick with us here and we'll figure out what's going on. But the best action may be no action for at least the next day and a half in trading. Of course, Monday, Tuesday, going to be light volume going into Wednesday being Christmas. Of course, light volume coming back Thursday and Friday. And, of course, then going into the new year. And I'm back the 5th. So tomorrow will be my last show of the year. I will still be writing my newsletters, and you'll be able to catch those fairly easily. As always, we like to start off the show with a little bit of history. If you don't know your history, you're pretty much bound to repeat it. And on this day in 1899, rocked by heavy casualties in the battle against rebels in the Philippines, the Dow Jones Industrial Average suffers its fifth worst daily percentage loss of all time, plunging 8.7%, or 5.57 points, close to the day low at $58.27. But I was kind of talking to Andy Heck yesterday about how nothing has changed, and it. I think I can't even remember what we were talking about. Anyway, whatever's happened in Wall Street before has happened again, and we were talking about that a little bit. But I thought it was kind of interesting that every so often you get reminded that there just isn't that much difference happening, or basically bad things happening that haven't happened before, good things that are happening that have had before. And we'll do that. History always repeats itself. Andy's texting me on the other side. Anyway, what else can you say? A few other news notes as we go through the rest of the show. What do we have? We got plenty of time here. The ruble. Interestingly enough, even though the ruble has bounced, reports coming out of Russia show that just how hard that the Russians are spending their cash while they can. They are assuming that this is just a respite and trying to get everything. Of course, I emailed or private mailed Tom during his show after mine, I think on Tuesday, maybe it was yesterday, that Apple had quit selling their products in Russia. And you just can't, when you get a currency that's moving 20% in a day, how can you figure out what you're going to sell? And can you be, and will people buy something when it's 20% more expensive than it was the day before? I think Apple decided that it was just as good as you could get. But what can you say? Anyway, let me read the article here. As the Russian authorities announced a series of measures to ease pressure on the ruble, which slid 15% in the previous 2 days, raised fears of a bank run. Many Russians were out buying cars and homes and appliances in cases in record numbers before prices of these imported goods shot higher. And basically, they cleaned the stores out pretty much yesterday of anything that was out there. And kind of interesting to see that as soon as they run in there and buy everything, the ruble came back. Crude lows, the average U.S. household is expected to spend about $550 less on gasoline in 2015 compared to 2014, as an annual motor fuel expenditures are on track to fall to their lowest levels in 11 years. So we will try to figure that out also. The FOMC meeting yesterday was fairly interesting to me anyway. The reason why is that why they really didn't change the language that much. Everybody was trying to read something into it. It reminds me of some of these witch doctors that you see take bones from some small creature they've eaten and throw them on the top of a trash can lid, and then basically figure out, some kind of meaning into it. We both know that it's probably just superstition, and there is no real meaning to it. But as we look into that, to me, it was one thing, and that was we had way too many people get way too short with way too quick of an expectation for the downside. But that does not mean that we are not going to see a downside. It only means that everybody got too short too fast and was expecting to get too much cash. This is the first of many, not the first, this is, I think, the last of many signs where we're actually seeing a crack in the markets. we at least, 12 of the 15 Fed chairmen said that they were looking for a rate hike next year. And when Yellen said that yesterday in her press conference, the market took a big dive and then, of course, ran right back up the other side. My guess is that there is a lot of continuing central banker shenanigans going on, and that we probably saw that yesterday. But their one goal is to make sure that this market continues down on lighter or orderly fashion. Probably not lighter volume, but orderly fashion. And that means that they're going to go out there, tell everybody, kind of like the doctor who says, this is going to pinch a little bit. And when they say pinch, it means hurt. But at the same time, they'll go 1, 2, 3 and give that pinch to you on number 2 just before you're expecting it. And at that point, kind of tough to figure out exactly what you're supposed to do. But it being unexpected means it hurts probably just a little less. So as we go through the day today, we're going to start looking at charts in the next segment, get our technical difficulties brushed to the side, and figure out just how much farther we've got to go, and if there is any money to really be had over the next few days. If I can get some things moved around on my page here, we'll get those going. What happened to that? I always wonder. There it goes. And go back to that. So what do we got? We got about a minute and a half. I'm trying to think if there's anything else we want to cover in this segment before we go to the other one. And I say that there's only one thing, and we've got time for it. And I want to give my prayer to Janet Yellen. For our Janet, who art in finance, hallowed be the Yellen. Thy auctions come, thy bills be done, in 2s as they are in 7s. Give us this day our daily fed, and forgive us our treasuries, as we forgive those that default against us. And lead us not into recession, and deliver us from deflation. For thine is the borrowing, the easing, and the printing, forever and ever and ever. Amen. And that's pretty much it. Anyway, what we're going to talk about in the next segment is some of the options we played and why we played them. We talked a little bit about it yesterday, but when we get back, we're going to talk about HLF. And we made a little bit of cash on that, but mostly because we got a gift given to us that we were able to receive. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I didn't bring up all of these yesterday. I don't think we got to AEM. Even the gold stocks out here on a day where we don't have gold really moving any appreciable amount. I think gold's up about $1.40 here. But a nice bounce. But you had everything you wanted in this. The November 5th low at $22.08. Came down into it, but did not pierce it on December 8th. It was still about 80 cents at 90 cents higher on that date. We did pierce it the last couple of days, though. And the best volume you had down at this low of 3.36 million shares. And, of course, you're going to get a bounce out of that just on an oversold bounce. What I dislike is that the bounce back down here still had some energy, and that probably means that you're probably going to get at least some consolidation. Another stock that I really liked out here and looks like it could be basing out are these high volume thrusts down in the case of home away AWAY, he said. $28.06 on November 6th. And you know, what can you say? You pierced it yesterday. It did it on 1.3 million shares compared to 2.2 million shares. And you get a bounce out of here. Now, what I dislike is if you're watching at home, I'm going to zoom in just a little closer. You can see that the energy up on my power law vector indicator was 1.8 million shares, back with 2.1 million shares. So what are we talking about here? The energy was slightly heavier on the way down, and that suggests that you're going to get at least one more test. Now, you've had a test on light volume. Doesn't mean you can't get a retest on lighter volume. Because of that heavy energy, normally I'm going to say that means a U bottom and not a V bottom out here. And normally you want to probably give it a week or two and see whether or not it comes back down there. And the next time with higher volume or lighter volume, if this thing came in with about 700,000 shares on a bottom, even I, who have not been on the gold gravy train, would probably jump aboard it. Another one out here, that one's something else. Another one out here is CTC Media. And, of course, this one, not uncommon to see these lows being tested on lighter volume. October 15th, $4.54. And it is down to, what, 520, yeah, 425 on, what is that, December 16th. And you only had 860,000 shares. So you came in, what, a third? A little less than a third. Not going to be uncommon to see a nice little bounce out of this thing, but we are seeing a little pullback. Now, any of these things that did come down and the energy from these last moves up, especially on this one, is a good example because back up the highs, the October 29th high had 1.5 million shares, and you got into it about 6 cents shy, but just 900,000 shares. So more of these things are setting up as consolidation trades than probably anything else. Now, some of the indexes out here were giving some pretty wild signs, especially yesterday. The Spain Index Fund, the EWP, was a good example of this. The October 16th low, $34.54, 3.5 million shares. We get into it yesterday. We did go below it. We pierced it. We closed back above it. A good buy signal on this thing. And you only had 2.1 million shares. Today, 2 million shares. Again, we're not probably going to have any continuing signs of strength, especially with the light volume and going into Christmas next week. So what these things are going to do is just bounce. They're going to consolidate, and then people are going to come back on January, 5th? I think that's because of the day I'm back. And on that day, we're going to see whether or not people have decided to be a little scared or start selling. I'm voting for the selling side. The EWT, which is the Taiwan Index Fund, same thing. And we can go through a lot of these E funds out here, but they all pretty much made some very nice bottoming signals. In the case of the EWT, October 15th, $14.61, 16 million shares. Got into it yesterday. Of course, pierced it, went below 21 cents down to 14.40. You had, let's call it 9 million shares. It closed back above in it, and you're not getting a little bit of sideways action. But this is another good one out here to see. When I look for V bottoms, I want to see this energy in this last leg actually decrease and not be the same. And that's pretty much the difference between looking at these stocks that should have a small bounce and a large bounce. And one of the other things that you want to look at is the high short interest in these stocks. Now, before we had all the technical difficulties, I wanted to go through one trade before the break here. That was HLF. Yesterday, we had I think it's Acorn? Anyway, big shorter on the street. He's the blonde-haired or white-haired guy who's been short against Carl Icahn on Herbalife forever. Came out on Bloomberg and Einhorn, excuse me. Yeah, I knew I'd remember it eventually when someone told me. But this was one that we played out here yesterday, and a nice little bounce. I was looking for more out of this, but basically said I was going to be buying it in the morning, and we did, and they ran this thing down to 35.45, and I was basically trying to get as many as I could around and below 40 cents. I think I ended up with a lot of them at about 35 cents. Is that? I'll have to go back and look. Anyway, we had a nice one-day bounce out of here, but a lot of people trying to push these stocks down at the bottom and just weren't able to do it. I think this one was one of the more likely ones where we were looking for some action on it. Didn't get it, but still made 100% on our options over the day. This one had, 2.8 million shares back on the November 12th low. We had 1.9 yesterday. You can see the volume was low all the way through there, and they were just running stops. Good time to pick up some quick cash. We'll be back in a minute.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
That's right. We got the Tom O'Brien Show directly after the show on most of TFNN.com, and then that's for 2 hours. And then we've got Andy Heck doing the roundup of those farm animals and other commodities probably rounding up some commodities. That'd be interesting. And he'll be doing that between 5 and 6. So hang on for that today. Anyway, we've got some other things out here I wanted to look at. We talked about ILMN yesterday. I wanted to see how that did. We were basically talking about how so many of these stocks that had gaps were bouncing off of them yesterday. And, nice gap in this one, actually. ILMN, nice pop-up on here. See how much time we got. I wanted to get to a couple of the trades that we had been playing. And one of them was 3D Systems. Ended up doing well on this, although it was kind of tough. The options really had been pushing up on this, and it been suggesting a expiration of about $35 on this. We ended up buying the 3250s, and then it basically came down on me, so it didn't do well on those. Then we bought the 30s, both at about 35 cents a piece. We were able to get out of the 3250 options at about break even, and we're able to sell the 35-cent 30 options at a little over $2. So they did well. And all of these trades out here were stocks that had 10, 15 days short interest on them. And that's one thing you really got to be watching. Now, for me, I thought all the money in this, at least this expiration cycle, would be on the side of the stocks with super high short interest. And for the most part, they were. Some of them did well. Some of them didn't do so well for us. Another one I wanted to show you was one that we basically ended up losing, I think, about 10 cents on, was FireEye. This is another one with a high short interest, but guess what? That all the way down, someone had been covering the new short interest numbers basically weren't as strong as we thought they were going to be. So they ended up breaking even on that, and or a little less. I think we were in these things. Now I'm going to have to look, but I think it was like at 35 cents, and they basically, or 60 cents, and ended up getting at them at about 50 cents. Now, options are an interesting way of playing, especially these highly volatile markets. I recommend it highly, and I know a lot of people say, well, options are a great way to go broke. They are a great way to also protect and have an automatic stop in extremely fast markets. Now, if you're pretty good at playing and figuring out these bounces, as I am, this is what, the third major round this year that we've made really big money on them in the daily newsletter, is that you just don't want to play them all the year. You're going to have about 2-3 times a year where you're going to have the opportunity to make a great amount of money, either long or short, over a period. You're going to get a trend. You're also going to have 2 or 3 times a year where you're going to make a great deal of money just in the last few days of expiration where there isn't much going on. And I haven't seen that with the weeklies. The monthly operations still seem to have a lot of action in them, and of course still 3 or 4 times the volume in them, so there's at least a little bit of liquidity in these. Now this was one, like I said, thought it was going to be self-evident. I really like the fact that it had come back down here and tested these November 5th low, $28.39 with 25 million shares. We got into it for 3.4 million shares. I just thought this thing was probably going to head back up to the 34.40. We had probably about 1 extra day down and probably put a little thorn in this one, but one that we got away with. And we can say the ball bounced our way. We'll see you tomorrow in studio at TFNN.com. And remember to sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.